Good morning, everybody. Welcome to this fortnightly market outlook webinar. A lot of exciting things or disturbing things are happening across the world, and we thought it was a good time to discuss where markets are headed, what is happening in the global economy, global markets, and to share our perspective, we thought we'll arrange this webinar. In order to share their perspective from technical and derivative perspective, I have my two colleagues with me. Good morning, Nagaraj.
Good morning, Deshpande. I welcome everyone to Fortnightly Market Outlook webinar.
How are you doing, Siddharth?
Good. Welcome, everybody.
Okay. So without further ado, let's start sharing the presentation. The full screen is visible, right?
Yes, it is visible.
Okay. So let's start. So this is the market performance. This is the most important data that over the 1 month and last fortnight, a massive fall has happened in American markets. Nasdaq is down by 12%. Nasdaq is down by 15% over the month. And out of that, the 12.5% has come over the last fortnight. Same is the case with other markets. Between 9 to 10% other American markets. FTSE CAC DAX, that is UK, France, Germany, Japan, all of them are down severely. Indian markets are also down for a fortnight, but still month on month, we have done much better. If you remember, 3rd of March, we bottomed out, and from those levels, we have risen, and we have risen 3 to 5%. Small caps are up 6% over the last 1 month. So compared to a 15% fall in a world's largest companies in Nasdaq, 6% gain in India's small cap, and this is a wide gap which has opened up. Also, let's look at what has happened over the week. So this week itself, the fall has been severe, 10% fall in the Nasdaq. So out of this 12 to 15%, the majority of the fall has happened over the last 1 week. Why this fall has happened? Let's study. So first, on April 2nd, President Donald Trump announced US reciprocal tariff plans that were more aggressive than market expected. A 10% of minimum tariff across all imports was put, and this was little harsher than what market thought. Market was thinking that right now he is talking earlier, but he will not put. If he puts, it will be lower, but he has gone ahead with very aggressive rates. New tariffs estimated to raise the effective tariff rates of US imports from 2.3% to 20 to 25%. This is highest in last 100 years. In order to retaliate, China also announced 34% of reciprocal tariffs. This trade war has rattled investors, rattled Fed. A lot of people are fearing that the recession may come into US markets. And that's why in last 2 days, we have seen some of the biggest wipeout in US history. Since the Donald Trump has become president, $11 trillion have been wiped out. $5 trillion has been wiped out since the trade war. So this is the chart which suggests from 1931, gradually US import tariffs were going down, and from here at one go, he is bringing tariffs back to such a high level. This is unprecedented, and many people think that this will put US economy into recession. Why he is doing it? Because these are the deficits US has with these major trading partners. So every year, US imports $300 billion worth of goods more than what they export to China, $236 billion worth of imports more from European Union than what they export. And this is the deficit across many nations, which is what is worrying Donald Trump, and he thinks that this is unsustainable. This is leading to huge debt. This is leading to these people investing and owning assets into US. See, what is happening is that suppose China is exporting 300 billion worth of more goods to US. They get that dollars, either they can repatriate that dollar back to their country or buy US assets. And he doesn't want that to happen. He is deliberately asking foreign investors to not invest into US markets, bring that money back to their market. And that's why we are seeing a huge exodus from the top 7 or the magnificent 7 stocks. That's why we are seeing a huge exodus of money out of US. So since the 1st of January, 3 major US markets are down severely, while bonds, emerging markets, and global markets are still up. And this outperformance has started. And if the policies remain like what it is, if they don't change or if he doesn't change his policies, then this is likely to continue. Bonds, emerging markets, global markets will continue to outperform US markets. So that is the situation that from all-time high, US Dow Jones is down by 15%, S&P is down by 17%, and Nasdaq is down more than 23%. This is the situation in US markets. Now, what has happened into Indian markets? Let's see. So, compared to what has happened into US markets and global markets, sectors which are globally connected, say for example, IT companies down 8%, metal down 7%, technology, tech, TECK down 6%, capital goods which are also affected by engineering exports down 5%. So anything which is connected to globe is down, while local companies, local banking, PSUs, FMCG are bucking the trend. And this is likely to continue. If global markets remain volatile, if there is fear of recession, the companies which are domestically oriented businesses will continue to outperform. And this is where banking and finance, PSU, power, FMCG, that is where we can look for investment ideas. So that's the first conclusion. Second conclusion is that this will not sustain. So though we are down by only 2%, 2%, 3%, we are a much smaller portion of the globe. If large economies like China, like US, Europe, Japan are going down, then eventually that will also impact our markets. And that's why if you see today's futures, because of this fall, we are also trading much lower than what we closed at Friday. And we will have an impact on Monday. My colleagues will share more information about how the various important levels are going to be there. And the cut a long story short, this will also impact our markets, and our markets will get impacted because of that. Now, because of this uncertainty, foreign institutional investors have been selling all the longs, which have the large investments they have done. They have been selling for last 4 quarters. The numbers are becoming, rolling numbers are becoming more and more negative. And for the past 12 months, despite their positive investments, net, they are still now 16 billion negative for the last 12 months. And that is a concerning figure. Okay. So that's what I wanted to cover in the first part. Now my colleagues will share information about the Indian markets from technical and derivative perspective. And then I'll again come back and try to share what are the new realities of this, whether US will go into recession, what are the various implications of these policies in the second half. Now, let me hand it over to my colleague, Nagaraj, over to you for technical levels.
Okay. Is my PPT visible?
Yeah, it's
Yeah, go ahead.
Okay. Thank you, Devarsh bhai. Friends, good morning, and we'll see how the technical patterns unfolding along with this violent moves in the global market. As Devarsh bhai mentioned, you have seen some sharp decline in global market, and that's going to impact the Indian market. Yesterday, Nifty, after showing a range bound action, witnessed the sharp moment and declined Nifty around 1.5%. Compared to the global market, that is this decline 1.5% is slightly lower. But overall, if you look at the overall chart pattern, the sentiment has damaged and bears gaining control on the market, and especially in Nifty. After range bound action, a clear decisive downside breakout has happened, and Nifty has broken below the immediate supports of 10 and 20-day EMA. Now the next supports lies in, these are the marks, friends, lies in 22,300 odd levels, where Nifty has formed a higher bottom, and the next lower levels is around 22,000. The crucial significant bottom reversal that has happened in the early part of the March. After that, market has moved up more than 1,500 points. This is on the daily chart. The market seems to have started momentum on the downside and broken below the support. Friends, this is a weekly time frame chart. What we have seen in the weekly is we have seen some significant upside breakout a week before last. After that, this breakout has fizzled out in the last week. Doji formation was indicating that some reversal pattern was unfolding at the higher levels at the major lower top in the Nifty, and that has exactly happened this week. That Nifty has declined by 2.61% so far, and the halfway mark of this long bull candle, we technically believe this, that the long bull candle normally offers the reversal point for the underlying. On that basis, Nifty is currently placed at the edge of moving below the long bull candle of the previous week and is likely to slide down to the lower levels, the lower end of the that long bull candle, which comes around 22,300 odd levels. Formation of negative reversal pattern on the weekly chart. So the next crucial lower levels to be watched is around 22,300 and 22,000 levels in the days to come. Friends, on the long-term chart, if you look at the long-term, the market was in a downward correction over the last 5 months. And last month, in the month of March, market has bounced back from the lower support. This is a long-term support of a ascending trend line. Trend line, and Nifty is again sliding down to the trend line support. This trend line support comes around 22,000, 22,100 levels. As per the long-term chart, there is a possibility of support placed around this 22,000, 22,100 levels according to the long-term theory. Friends, the Bank Nifty is so far has been a resilient. What we can observe on the chart is this box is indicating after the significant up moves from the lower levels, this Bank Nifty has witnessed a consolidation moment. In the last couple of occasions, the similar consolidation or a range bound action has been witnessed over the 1 or 2 weeks at the higher levels, and eventually that consolidation has broken into a lower side. In the last couple of times it has happened, and the similar kind of a pattern is happening currently in this chart. On the daily chart, what we can observe, last 7, 8, 10 sessions, Bank Nifty is showing consolidation. Looks like Bank Nifty is showing a strong strength amid violent broader and global markets, and the overall chart pattern is indicating that certainly the Bank Nifty has been a resilient so far, and we are likely to see eventually Bank Nifty coming down. As happened in the past, I'm expecting banking sectors to come down, and the immediate support of around 51,000 to be broken on the lower levels. At the lowest, 50,000 is going to offer a strong support, which is a 200-day EMA. Friends, this is a mid cap and small cap chart. What we can observe on this, that after a significant upside bounce, the market, this broader market indices was not able to sustain the higher levels. The breakout has fizzled out. The broader markets have started to correct from the higher levels, from the major lower top, and the correction is going on. The overall chart pattern is indicating the reversal has happened in the broader markets as well. We are likely to see more downward correction in broader market like mid cap and small cap, and it is time to place a stop loss, at least to avoid some of the mid and small caps which are weak on the charts, which are facing the severe selling pressure. We are likely to see more buzz on the downside. we are likely to see some selling climaxes in some of the mid cap and small cap stocks during this downward correction in the broader market indices. And friends, this is the next chart. The sectoral indices. First one is the metal one. Metal has been in a long-term uptrend. Over the last few months, it has been in a correction. Lower tops, lower bottoms was there. After the lower top formation, now currently the metal index is placed at the important long-term support. It is in fact just violated the support. And the chart pattern is indicating that there is a possibility of more weakness in the metal sector. So we are likely to see some selling momentum to continue in frontline metal stock as well as the mid-cap metal stocks ahead. And the oil and gas sector is also not spared. It has reacted down from the lower tops from near the crucial support of 20-week EMA. After the formation of bearish three-candle pattern, this oil and gas sector has declined sharply in the last week, and I'm expecting more weakness to come in this oil and gas sector ahead. So one needs to be very cautious in the front line as well as in the mid-cap oil and gas stocks, as we are likely to see some deep cut in the stocks in this sector coming ahead. So friends, this is the international global chart. First one is Dow Jones, as Devarsh mentioned. After moving into a sustained up move over the last many months, finally Dow Jones has witnessed some violent moves. This move has not only broken below the important support of ascending trend line, but currently looks like a very strong downside momentum which is in force. The bloodbath, what we can say in the US market, and the more weakness is likely to come. If you look at some of the European market like US FTSE, this chart of a US FTSE is placed that the uptrend of the last few couple of months has witnessed on the downside. The index is placed at the support of as per the role reversal, as per the change in polarity, somewhere around 6,000 odd around 8,000 odd levels, 8,000 to 8,500 odd levels. This has declined sharply from there, and I'm expecting more weakness to come in this US FTSE, especially in European indices. So, friends, the downward correction has started in the market. Market Nifty has regained the momentum on the downside. Global markets, global assets are witnessing bloodbath. Immediate supports of Nifty have started to break down one after another. One may expect a minor support around 22,300 levels, which is the lower end of the long bull candle on the weekly chart, which has formed a week before last. And that could eventually, and even Nifty could eventually slide down to the 22,000, 21,900 area, where Nifty has formed an important bottom reversal during first week of March. And I'm expecting a slightly higher bottom or a slightly lower bottom or a double bottom kind of a formation at the lower levels. However, any sustainable upside bounce only about 23,400 levels during this time could change the bearish sentiment that could open for further short covering. But looking at the overall scenario, the global market, asset class, Nifty, and technical chart pattern, that doesn't looks like in the near term, at least for short term. The overall trend of broader markets like mid cap 100, small cap 100 are in a sharp downward corrective mode. One may expect sharp weakness in the selective mid-cap and small-cap stocks. Friends, one needs to be very cautious. If you have a long position, place a strict stop loss, and better to avoid, at least for the some of the mid-cap, small-cap stocks which are vulnerable to the global market decline or a US decline. Sectorally, friends, lots of sectors are in a downtrend, especially IT, oil and gas, CPSC, pharma, realty, and automobile. Metals are the one which are falling in during this week, broader and global markets. And other side, banking, consumer durable, and media are showing some resilience. We could see some decline over there, but these indices could slightly outperform the benchmark as well as the other sectors. That's all from my side. Now over to Devarsh. Sorry, over to my colleague Siddharth for a derivative commentary.
Yeah.
Yes, Siddharth, please unmute yourself and speak. Your presentation is visible.
Yeah, it's visible. Yeah. Good morning, everyone. I will be focusing on mainly on Nifty future, Bank Nifty future, and open interest data. Let's start. So if you see that the last 5 days of data in Nifty is continuously making lower top, lower bottom formation, where it has almost corrected 2.61% with the open interest rise of around 8.80%. This indicates that there is a build-up of short position in the Nifty future in the last week. And if you see that PCR is currently trading at around 0.74 level, which is the oversold level. So basically, oversold level starts from 0.65 to 0.75 level, and overbought is around 1.5 to 1.60 level. So I think Nifty is heading towards that oversold level. So there is a slightly chance in on Monday if Nifty opens on a lower side. So I think we may go to the oversold level according to the PCR. So now we'll move to the Bank Nifty chart. Basically, Bank Nifty has outperformed overall Nifty in the last week. Bank Nifty has just fallen almost 0.12% if you compare week on week data. And there is a massive open interest uh, decrease around 22.3%, suggesting a long unwinding of position in the Bank Nifty. Bank Nifty is basically currently taking support around that 51,500 as Nagaraj said. So I think on Monday we can see a gap down, but almost 51,000 is a good support level. If you see that earlier chart, around 51,000 from 100 from that level, the Bank Nifty has bounced in the last week. So we may take a support around that level in coming weeks. So this is the basically open interest data in Nifty. If you see in around 23,000, almost 67 lakhs number of contracts, 6 lakh 74 lakh contracts has been added, where we can see a call writing. So around 23,000 and 20,500, we can see a call writing, major call writing. And support lies around 20,500. So this is the 20,500 where almost 3 lakh 98,000 contracts has been sold. And next support lies around 20,000. So on Monday, I think according to the Gift Nifty may vary the range also. So according to that, 20,500 is a good support level. So this level should hold in coming weeks. For a Bank Nifty is currently trading around 51,593 level. So 51,500 followed by 50,000. These are the good support level for the Bank Nifty where the put writing has been already happened. And on the upper side, 52,000 to 53,000, where the call writing is there. So we can expect a resistance around that level. So for the next coming weeks, we can, for at least 2 weeks, we can expect a range of Bank Nifty from 50,000 to 53,000 level. This is basically a sectoral open interest data. If you see technology, telecom, and metal sector, where Nagaraj also mentioned, the major short built up has been already there. This is the open interest data, and this is the price fall. So almost in metals, technology, and telecom sector, we have seen a fresh build up of short position on Friday. This is basically heat map of last weekly chart. So these are the number of shares which has seen long built up, like PNB, GMR Airport, IndusInd Bank, which has seen a long built up. Long winding was observed in VDL, ONGC, and Cyient. Fresh short build up was seen in IT sectors like Coforge, Persistent, KPIT Technology, Metal Sector, Hindalco, Emphasis, IT. And short covering was observed in Idea, Tata Communication, and Indus Tower. I will next toward the basically this is the outperformance chart of sector wise. So if you see overall perform in the last weekly, so TVS Motor basically outperform in the weekly chart, and where Bharat Forge has fallen most up by 10.7% in automobiles. If you consider the banking sector, banking 5% has 5%. IDFC First Bank and ID Industrial Bank has shown a fresh built up of position, and weekly also it has outperformed. And you can see 3.4% that is PSU Bank, where it has fallen by 3.4%. Next is the capital goods, where Astral has outperformed and Voltas has underperformed. Like cement also, you can see Ramco Cement has outperformed by 5.3%, Ambuja Cement is underperformed by 2.1%, Chambal Fertilizer 0.6%, Tata Chemical 5.9%. FMCG, most of the shares you can see outperformance, like FMCG has also closed flat. So Tata Communication is up by 8.1%, then Marico, Kalyan Jewellers is up by 4.5%, and Dabur is closed by 8.9%. So in finance sector, PNB Housing, IFL has outperformed, and REC and M&M Financial has underperformed. Infrastructure, GMR Airport, which has seen a built of long position also, which has risen by 6.2%, and Adani Port has fallen by 3%. And last one is reality, where Hudco has outperformed by 1.5%, Oberoi Realty is underperformed by 5.8%. So this is the FI to long ratio. So from last week, it has fallen from 0.66 level to 0.41 again level. So this suggests that build up a fresh short position in the by FIs in the index option, index derivatives. This is the FIs are created basically, you can see that FIs created fresh Client has created fresh long positions and FI has increased their short position over here. So outlook for the Nifty, basically short build up of any Nifty which in the last week with the highest call open interest is around 20,500 and followed by 20,000 where the Nifty might face a resistance around that level in the coming sessions. Where put rating was observed around 20,500. This is the first support followed by 20,000 where the next support is expecting. If Nifty sustains about 20,500 in Monday or Tuesday, then we might see a small bounce in the Nifty for a coming session. For a bank Nifty, long underway was observed in the bank Nifty on weekly basis. Trading range is expected to be 51,000 to 51,300, 50,000 for the bank Nifty. Where call rating is around seen as around 52,000 level followed by 53,000 and support is observed around 51,000 level followed by 50,000. Over to you, Devarsh.
Okay, thank you, Siddharth. So let me share my screen again. Can anyone confirm? Is it visible?
Yes.
Yeah, okay. So now what is the most important problem or the question which is there in the investors' mind, global investors' mind? The $10 trillion question is whether US is entering recession or not. And in order to understand this, we have to see what is happening in the US policies. The economic policy uncertainty or the trade policy uncertainty is going through the roof. And we know that the investors or consumers, apart from the actual earnings or the actual funds, the sentiment plays a major role. And sentiment has taken a huge hit. And that's why we feel that the US markets is correctly anticipating the upcoming slowdown in US economy. And US is going to slow down. Right now, the numbers are strong, but the policy and the action which has been there in the market will impact the US economy. It will impact the US consumption. US majority of the consuming class or the rich people have exposure to stock markets. The service class people or the people who have 401k accounts, they have seen their retirement pool, their money, pension money, which is invested into S&P 500 and other indices, down by 15-20%. When you see your wealth eroding such a large percentage in a matter of few days, few weeks, 2 to 3 weeks, obviously it is going to have a huge impact on American economy, and that's why American economy is headed towards slowdown. As of now, most of the parameters which Moody's track for US economy, the leading or coincident or lagging, were suggesting a low probability of recession. Gradually, many of them will change, and we fear that US is headed towards slowdown. So that's the first big important observation, and that means we have to limit the exposure to the exporters. Second important announcement or the policy change which Donald Trump has done is that he has withdrawn the defense umbrella which he was providing to many parts of the world. US will no longer give money to protect other countries or give military support. Last many decades, we have seen that most of these countries were focusing on spending money on energy side, trying to reduce the exposure towards fossil fuel and investing in electric vehicles, alternate energy like wind power. The changes which has happened since the Donald Trump has become president, that the focus is towards bringing the cost of energy down, more supply towards crude oil and gases, prices of those commodities are crashing. that means the investment towards the alternate energy and other energy aspects, the renewables, will go down. And second thing is that they will also have to spend money on defense. Germany has announced a huge capital expenditure towards defense. Many countries around the world will also have to spend more and more money towards defense. That means two implications. One, money will move from energy stocks towards defense stocks. Second, many countries are looking for a reliable supply chain partner in their defense companies, apart from US and China. So that means over the next few years, 3 to 5 years, there is a possibility that Indian defense companies may get small orders, component orders, or other orders, which is likely to make this as a big sector going forward. India's defense exports are rising, and government has a policy that it is conducive towards that. So eventually, we expect that over next 3 to 5 years, we may see Indian defense company getting a lot of orders. So there is a second implication. So that's what these are the two major implications which I wanted to cover. Now, the second portion of my presentation, which I wanted to share, is that despite all this, there is opportunity in the market to invest in individual ideas and benefit out of the opportunity. Indian markets are impacted by global flows, but the most of the money, the foreigners which were actually withdrawing money from Indian markets, when they are withdrawing money from US markets, US is a 60 to 70% of the global markets. If they are withdrawing money from there, if they are not going to put more money there, that means money may move towards emerging markets, European markets, and other markets like India. So we may see as the dust settle after a few weeks, the FI selling may reduce. That will have an impact on Indian markets. The Indian domestic investors have been investing quite systematically through and consistently through SIPs, and SIP flows are still strong. And that means as long as that remains strong, the domestic institutional investors will have capital, and that means Indian markets are likely to outperform. And if domestic oriented stocks and sectors, if we are able to pick them, or stocks which are benefiting out of such policies, there is still money to be made. We have our flagship product in the form of Pick of the Week. We have been issuing stocks, investment ideas every week, Monday morning. You are getting them, and since the Prime Research, our new avatar of retail research, we have been issuing many good investment ideas. 4 of them have achieved their first target between 9 to 12%. 3 of them have achieved their second target also between 18 to 22%. And this is a good alpha over the indices. From the 1st of January, mid cap and small cap indices are down between 10 to 15%. While on an average, if you put money equally among these stocks on an average has given almost 11% return. These numbers keep changing every day because some stock may go up 5%, go down 5%. But as of 3rd of April, it was on an up average 12% return has been generated. So you have access to this information. Focus on these investment ideas, not apart from that. In FY24, 183 such ideas have been issued. In FY25, 110 such investment ideas have been issued. We have been consistently sharing these investment ideas. Please make use of this. Not only in technical fundamental side, technical and derivative side, across the years, more than 2,000 recommendations have been shared, whether it is index future, index option, stock future, stock option, or MTF ideas. I recommend that please look at these ideas and focus on sharing these ideas with your customers. If you are investing yourself, look at these ideas. there is still a lot of opportunity in Indian markets, both on the trading as well as the investment side, and we can make use of these ideas to generate wealth. So focus on more adopting the research ideas, focus on using these ideas, and as this chart shows, if we apply ourselves, for example, we could anticipate the money moving towards defense, and GRSC and Musdok has done quite well. Similarly, other ideas. So we will continue, that will be our endeavor to continue bringing such ideas to you. And if we make use of them, we will be able to generate a lot of profits and wealth for our customers. That's what we wanted to cover in this webinar. Monday, there would be sharp gap down, as my colleagues pointed out, but at lower levels after opening lower 300, 400, 500 points. We do not expect that the markets will continue to move lower. There are some rumors going on that the market may hit lower circuit, or there could be huge correction. India is likely to outperform the global markets. We have confidence that at lower level, we will find some support. So no need to panic. And at lower level, around 21,800, 22,000 level, there should be some buying support in the Indian market. That is the advice from our side. If you have any questions, we can answer them. We have about 10 minutes to answer the questions. No, there is no expectation. We don't expect any lower circuit on Monday, as somebody is asking. We will share this PPT in the form of derivative and technical weekly. Nagaraj and others will share technical and derivative weekly over the next few hours, and this PPT will be available to you. If you have any questions, please put it in the question and answer box or raise a hand. I'll try to answer as many questions as are possible. Meanwhile, before the question, let's wait for a couple of minutes for the question queue to assemble. Meanwhile, let me ask question one to each, you, Siddharth and Nagaraj. Nagaraj, banking has one of the sectors where we have been asking investors to hide, or investors to park their capital, because we think that that sector is immune. Can you look at the Bank Nifty chart, and do you feel that it is outperforming the Nifty? What are the important levels as you mentioned in the chart? Can you please repeat them?
Yes, thank you, Devarsh. Yes, friends, banking sector is the one that has outperformed the benchmark and the global market. If you look at the charts, as I mentioned in our PPT, that banking sector was moving in a consolidation period. Previously also, this has happened couple of occasions, that consolidation eventually turned into a downward correction. But if you look at the overall chart pattern, long-term chart pattern, I am expecting there is a scope for the outperformance in Bank Nifty, especially PSU banking, and the Bank Nifty overall compared to the benchmark as well as the global market. So there is a correction, no doubt, that we could see some downside breakout of the current consolidation pattern, but eventually Bank Nifty could bounce back strongly from the lower levels. Bank Nifty as well as PSU banking are likely to outperform against the benchmark as well as the global base.
That answers the question. Surendra Keshri has asked, what about the PSU banks? So PSU banks are likely to outperform the global markets. A, because they are domestic oriented. B, the FI flows into the debt market is very large. That means Indian 10-year treasury yields are headed lower. It has come down to 6.5%. We expect RBI to cut interest rate on April 9th, and that means the interest rates are headed lower. That lower treasury yields may lead to large mark-to-market profits for the PSU banks in the coming quarters, and that will also support their profits apart from the regular operating profits. So there is a tailwind to this PSU banks. What about IT sector for investment? Ravi Bhushan is asking. IT stocks are very strong balance sheet wise. They have huge cash on their balance sheet, but compared to other sectors, the business is directly connected to the global economy. Global economy is in the bit of a funk, and that means they will have problems. So we are cautious on IT companies. IT companies, traditional businesses, because US exporters will be in trouble and these US multinational companies give orders to Indian IT companies, if they themselves are worried about their business prospects, the likely flow of business to Indian IT companies are likely to be slow. On the other side, they are being hit by technological revolutions. AI and other disruptors are chipping away with their business potential. The products or the projects which were required 100 programmers, if a new employee with the AI skills, with the Copilot and other tools, they are likely to write those codes faster with the help of lesser people. That means the not only the top line is under pressure from lower growth, the requirement for the same kind of business is also headed lower, and that means Indian IT companies may have a tough time going ahead, and we are cautious on IT. Is it the right time to invest in defense stocks? See, it generally over next 3 to 5 years, I think many defense, smaller and mid-sized defense companies will have orders. One particular company may have run up 20-30%, and they may not be a good time to invest in one or two of them. But overall, as a theme, over the next 2 to 3 years, these companies are likely to benefit. Gold, obviously, we have been bullish on gold. It has run up a lot. Last few weeks, it has seen a surge. At the end of it, it is a commodity, though precious metal. If there is more correction into dollar, then obviously there is some tailwind to gold, but majority of the move in the short term has happened. So I do not recommend any aggressive new money going into gold, but 5 to 10% of the portfolio, depending upon your risk appetite, should remain with the other assets like gold apart from equities. We can't take questions like individual stocks, Ketan, on bank or anything, so we will not be able to answer. No, we should not be aggressively bearish on the market, though right now US markets have gone down 5%. Indian markets are likely to open lower, and on Monday we will see market correcting, but at lower level around 22,300, 22,000 level. I expect that there should be some kind of buying support into Indian markets, and that's why we should not be aggressively shorting once we open on the lower side on Monday. Around those levels, we may expect some kind of support. So this is the expectation. Things are very fluid. Every day we are getting new announcements. So as and when something new happens, we will be there. We will keep guiding you through our morning commentary and our evening commentaries. So apart from this fortnightly market webinar, please go through our daily market commentaries, in which we will continue to update you regarding what should be done with the investments. Real estate investments will also get impacted. Majority of the real estate were also related to the wealth effect of the stock market. The premium side of the market may get impacted because of the lower stock market, but the affordable housing continue to do well, and their government policies are also going to benefit. The housing loan is expected to improve the volume as RBI is likely to cut the interest rate in April, and if inflation remains in control, again in August, we are expecting one more interest rate cut. After 25 basis point of 2 interest rate cuts, I expect housing finance companies to do well, and we have to anticipate that in advance. So as an investment theme, we like housing finance company over the next 1 year. And real estate companies who are into affordable housing can continue to do well. All right. Any last comments from you, Siddharth?
Yeah, I think according to the charts and everything, everybody should watch that 20,500 Nifty level. And we are not expecting market to fall majorly from that level. Means there is a chance it might fall to 20,300, 20,000 level on Monday, but gradually it will recover. And if you see at weekly, so that 22,500 should hold. If it is holding, then we can expect a bounce in the Nifty. So you can start deploying small money into the equity market if you are not started.
Right. So incrementally, let's see, we are right now looking at the situation. April 9th interest rate cut is expected. The GDP numbers for the January, February, March quarter should be higher, around 7%. The high frequency data, which we track for February and March, are looking like that Indian economy is relatively strong. So at lower levels, around 22,000 or 22,500, we should see some kind of buying support. Compared to global market, we should find some buying support at the lower level. But as I mentioned, as and when the levels come around 22,000 or 22,300, if we find support, if we get some buying, we will keep updating you in our daily morning commentaries, and please keep reading them to get the updated levels. So things are very fluid. The US markets have corrected. Our markets are likely to open lower on Monday, but at lower levels, we will find some support. That is the message from our side. Thank you everyone for joining, and I hope this has been useful. Thank you, Nagaraj. Thank you, Siddharth.
Thank you. Thank you, everyone.
Okay. Thank you, everyone. We're calling the close for this webinar.